Welcome to Mortgage on My Mind, where we take the mystery out of mortgages and make dreams of home ownership a reality. I'm Natalie Salins, a top 1% mortgage broker with 20 years of experience, based right here in sunny Los Angeles. If you've ever wondered about pre-approvals, appraisals, or what loan product is right for you, don't worry, I've got Mortgage on My Mind, so you don't have to. Each week, I'll bring you expert advice, real-life stories, and insider tips to help you navigate California's competitive real estate market with confidence. Whether you're buying your first home, refinancing, or just curious about how it all works, this podcast is for you. So let's talk mortgages, demystify the process, and make your real estate goals a reality. Ready to get started? Let's dive in. Well, hello, Nick Disney.
Hey, Natalie.
I'm so excited that you are here today. I cannot wait to talk about all of the information and incredible opportunity that you have. A lot of, my listeners already know about mortgages or have the basic understanding of them,
Sure.
but not really how to invest in mortgages, in mortgage notes, how to make and sell them. And the pros and cons of that, of course. So
Sure.
We're so excited to talk to you. Tell us a little bit about your company, Sell My San Antonio House.
Absolutely. Obviously, we're based in San Antonio, Texas. We're on the investment side of real estate. So all we do is investments. 99.9% of what we do is in the single family space. And our main focus is we will buy houses, we will fix them. And when we sell them, we will create the mortgage. We sell them with owner financing. So we're going to make a mortgage just like people would get a traditional mortgage. We just have, a couple of different steps. And since we're then becoming the bank, we collect principal and interest payments from them. And so those mortgages, we hold on to some. A lot of them we will sell to other investors who want to own the mortgage. And, thanks for having me. I'd like to walk through as many steps, answer as many questions as I can. And
interesting. I mean, it's literally nothing I've ever thought of doing. I've been in the business 20 years now. I've sold, honestly, thousands of mortgages. And I've never actually thought of writing my own and what that entails. And I mean, do you go through an underwriting process? Like, what is that like? Yes.
So absolutely. So if you want to create your own or you just want to buy them, those are kind of the two choices. We have a full business where we're creating them, we're rehabbing the houses, and we're selling them. We have a full underwriting process. There are a lot of guidelines we still have to follow because we are typically selling to owner occupants. So we'll still process them through an RMLO. We still have to document ability to repay. And we have initial disclosures, final disclosures. We're going through all these steps, right?
So you're government regulated or?
So we're not government regulated. We have a third-party RMLO who specializes in owner finance, and they are regulated, and they also do a great job of make sure everybody stays within regulations, and they will help us process our files. But at the end of the day, what happens is just like if you have a mortgage payment on your house, you made that mortgage payment every single month, and that bank, and you looked at it and you said, man, this bank gets a whole lot of interest for how much principal I paid down.
Yeah.
And you are very correct. And what I would say is, what if you just switched to the other side and collected the interest instead of paying it? That's the only other position you got to look at. And it's not the only way, but it's a great way to create monthly cash flow that can be very consistent and very predictable. And then, of course, just like the bank, you get the asset, which is the house, as collateral until you're completely paid off. That's how mortgages work,
Right. Do you do 30-year notes or do you keep them shorter normally?
We will do a lot of 30-year notes. The 30-year note definitely has some advantages, but we'll do 15, 20, or 30 years, depending on how they qualify and, what we feel like they're going to be able to pay. And we can document ability to repay. While a shorter note is better on the investment side, some investors like a shorter note, but a lot of investors like a longer note because, on a 30-year mortgage, it's almost all interest for, the first few years. And so that puts the investor in a really good spot. So that's why a lot of folks will want the longer one.
Right. And so do you hold or your investors hold
all of the banknotes? Like, do you have different investors that come in to do they all
Absolutely.
flips? Yeah.
Absolutely. So most of the people that invest with us, we will do all of the work. They don't want to find the deal. They don't want to repair the house. They don't want to sell it. They don't want to create the mortgage. Perfectly fine. But just like a mortgage that you created and somebody lived in, and then it's later sold from one bank to another, and you've got it, and they're like, hey, nothing changed on your mortgage. You just now pay Wells Fargo, wherever, it was sold to.
Right.
I can sell you a mortgage the exact same way. I'm transferring the note and lien from Nick to Natalie. And now, just like a bank would do, you have the right to all of the payments and the collateral that goes along with that promissory note deed of trust.
And so Natalie gives you the money of the note.
Right. So you would buy it, right?
I
So,
buy it.
right.
And
You bought
is
it.
it like a dollar for dollar thing, or how does
We
purchasing?
typically,
Yeah.
we typically sell ours at unpaid principal balance, which is dollar for dollar. There are all kinds of notes you can buy in the world. And you would decide what you're hoping to get out of that, because there's performing notes, there's non-performing notes, and notes have different interest rates.
Right.
We have a service, and we typically are right about 10.9%. So for a lot of people, if I said, hey, you could get 10.9% set for the next 30 years, that might work for you.
Is that what your standard mortgage rate is?
That's what our standard mortgage rate is.
Oh, okay. So you're giving hard money loans.
I'm not giving hard money loans because hard money loans would typically be for investors on investment property and are almost
Right.
always short term. What we
Right.
found is a niche for people who they don't right now qualify at a bank. They can't get a bank mortgage.
Sure.
But in our underwriting process, we don't do people who have been foreclosed on, who have terrible credit history, who have all their cars repoed and 15 credit cards. No, but there's a lot of people out there, especially small business owners, who don't have a lot of established credit, but they have no bad credit. They have a substantial down payment. They make a lot of money, but they are not going to get a mortgage through a traditional bank because they just don't fit in that model. They don't have the established credit. Many of ours have no credit cards, never had a credit card, paid cash for their vehicle. These people don't miss their payments, but they're also not going to get a mortgage. And so we found a way like, okay, yes, in the book, they're more risky, but a lot of ours only have one payment. They have no fixed debt except for that one mortgage. And if you look at their income, our DTIs, or debt to income, for anybody who's not in the mortgage world, our debt to incomes are often very low. And so we've been able to create a win and get them something that they can afford. But yes, it is typically at 10.9% because they're also investments, right? If they were at 4%, you wouldn't want to buy them.
No, for sure. Well, even that's the thing, like rates right now, if you come to me,
Mhm.
even on a loan that is very hard to, so a lot of people will come to me because I'm creative and I like to give people mortgages that
Yep.
people have told no to.
Mhm.
Because there are lots of what we call non-QM mortgages, which are non-qualified mortgage. Is what it stands for. And those are like your bank statement only, your P&Ls, your asset depletions, the loans that tax returns aren't going to work for you, right? And you
Right.
do take a lot of deductions, or you're self-employed and the strikes for last year and your income just came in a little bit low, and we have to look at alternative ways to get you qualified. My rates on those loans are still around 7.
That's great.
You know what I mean? So they're similar to the standard conventional rate right now. But it is also like, who's going to invest with 7? I don't know if I would buy a note at 7%, but I certainly would at 10. So it's very appealing, no question.
Mhm. And so we don't put any prepayment penalties. If later they want to refinance, that's absolutely fine. We're very happy for you. It's not a problem.
That's
We can go
great.
make another one. But our goal is to set everybody up for long-term success. We vet everybody. We have quite the process as far as going through screening. And we have a very low default rate because we spend a lot of time there. And then your notes also as an investment, they have more value, right? When you do things right, you can document things the right way. Because most people that buy it are like, hey, this is great. If I can get 10+% and I don't have any headaches and they just pay, that's not a bad deal,
Right.
So that's how we built our business. Yeah.
So fascinating and brilliant. I mean, it's awesome. I have a note here that says how, transitioning from rentals to notes.
So when I started, and I've been doing this about 15 years now, just investing in real estate. And I started in, I think the way I saw things is like a lot of people. If you want cash flow, you buy rentals. And I am not against rentals. We still have rentals. But what I learned quickly is you own rentals and you pay the real estate taxes, you pay the insurance goes up, repairs, turnover,
Oh,
tenants, the headaches.
I'm a
Really,
landlord and it's not easy.
the cash flow is not that much. There are advantages to rentals, and I'm not anti-rental, but the cash flow is not that much.
Right.
You have cash to invest. Notes are not cheap to buy. Our average price point is probably around $150,000 if you bought the note. We're in San Antonio, so the price of our housing is obviously lower than a lot of areas.
Very
But
different. But it also makes it appealing because you can get in and invest on something that doesn't actually, for some people out here anyway, break you, you know?
doesn't break you, right? You
Yeah.
could buy lots of our notes for the price of one house where you're at. But that note, it's set. It's not, it doesn't flow. This is how much you get
Right.
paid, principal and interest every single month. The real estate taxes are not Natalie's responsibility as the bank or as the mortgage holder because it's not your house. The repairs
Right.
are not your responsibility. The insurance premiums are not your responsibility. That's just, you don't call the bank if your toilet breaks in the middle of the night, where there are all those headaches when you're a landlord. And so it can be a lot more hands off and a lot more predictable. And the cash flow set like this, there's nothing coming out of this amount. And
Yeah.
so if that's someone's goal is really just cash flow and they have cash to put that they want invested in real estate, notes can be a really good option.
Yeah.
And that is probably the biggest reason why I transitioned from owning rentals to owning more notes.
That's amazing. And would you say, so what if somebody who has a note wants to get rid of it?
Yeah.
Like
So
how would, if I hold a $200,000 note and I'm making, they're making monthly payments and I'm just done and I want to get rid of it and invest it somewhere else.
So notes are sellable, right? People buy and sell notes all the time, every single day. A couple things are always, not always, but almost always going to come into play. How was the note made? Because anybody who's buying one is going to say, hey, did you follow the steps you should follow? Can you document that you follow the steps you could follow? They're also going to say, hey, Natalie, we'd like to see the payment history. And so, hey, did these people pay on time or
Mhm.
is there, is it all over the place? And so that will have more value. And I mean, ours is also done through our network, right? Why can we sell them at value?
Like,
Because I know a lot of people.
because right. And is it you're collecting the notes by your company is actually flipping and then giving notes on those particular properties?
Exactly right. We're creating the note. We have bought the house. We prepared the house. We vetted the buyer, sold the house. And when we sold it, instead of that buyer coming, with Natalie and Natalie's creating their mortgage, we're
Right.
going to create the mortgage and we're going to be the bank as
And
well.
do you only sell to someone who's buying your mortgage?
No.
Oh, okay.
Mm-mm.
Got it.
It happens quite a bit. Somebody shows up and they're like, hey, we have cash, can we buy it? Well, of course. I'm a businessman. I'm not crazy.
Right. Cash for sure. Yeah.
We don't do a lot of traditional flips anymore. You can make money doing flips. Flipped a lot of houses, but for the time and energy that goes into it, and for what you get back, where you do get a lump sum, you don't get that long-term residual income, and you have to go flip another house. That's the only way to keep making money. So we don't do a lot of that because it's just not my favorite way to invest. But I mean, people can be very successful with the traditional ones. And if somebody showed up and had financing and really wanted the house, it almost never happens. But yeah, sure, we'd sell it to them.
Right. So cool. And what happens when, for you guys, I know what happens on our side when somebody stops paying.
Yeah.
But we are government regulated and such. What happens if somebody stops paying on your side? Like, how do you, is it, what happens?
Yeah. So it's not that hard on our side. Our notes are all in San Antonio. So we're in the great state of Texas, and we'll just reach out to really, we have very few foreclosures. Nothing is guaranteed.
Right.
But in our process, we meet every single person that buys a house from us. So we will call them. Or if Natalie has bought the note and you're like, hey, can you see? We will call them for you because they know us, they've met us, they've been to our office, they know. And usually we can find out. I mean, the system's not perfect. People miss a payment every once in a while,
Yeah.
but As far as if we truly can hold them in default, you would reach out to an attorney here. Obviously, we give people some referrals of people we've used. The attorney will handle it. They'll send them, their letters that they need to get and start to process it. They do have to pay for the house. If not, then you would foreclose and you would take the collateral back. We almost very rarely do we have that actually happen.
Right.
Because of everything we built into the front end and the lessons that we've learned over, you know, all the mortgages. Because we made mistakes and we've learned from them, and we don't do those things anymore. But that's what would happen. We would connect you with our folks and walk you through the process. And
Process. Okay.
it's really not hard.
And it's the same rules and guidelines as far as like if somebody has a hardship, they can take forbearance or deferment. Same thing, or
So all of those things would still fit because they're owner occupants in there. I don't know the laws in California as well as I would know here, but it is, to my understanding, a much faster process in Texas than it would be. And, different states have different rules, but
sure.
it's almost always you can work it out and not do that. But if you have to, you can also be in a very good spot as the investor if that happens and the people
Sure.
choose not to pay you because you have
Interesting.
an asset.
Because out here you have like no rights really as an owner, landlord, anything.
Oh.
So I imagine it is very different there where you could actually get somebody out or,
Oh, yeah.
just stop paying. Yeah.
Huh? If we had to do it, I would email the attorney, ask them to start the process. We'd send them the documents, how they're created.
Right.
They would handle it. And then if we were not able to get any response or they didn't decide to pay, most of the time, if people get a big packet from the attorney, they're like, oh, wow, this is serious. And they just go make their payments. which is
Right.
fantastic.
Exactly.
Cool.
Exactly. And that's
Whether
what
you
you
made a
want
payment a
them
month.
to do. That's what you hope to
Absolutely.
do. Yes, of course.
Absolutely. But if not, then the attorney will ask you, what's the opening bid from the lender, which you would say, hey, this is how much I'm owed. And they would start that as your bid at the foreclosure
Yeah.
process. You don't have to go down there or anything. And someone would either buy it or you would get your house.
Yeah. Yeah. So all of this amazing. Thank you so much for
Of
your
course.
information. So what would you say to somebody new who
Mhm.
would be looking into getting a mortgage note? Like what should they know before diving in and things like that?
I would say this. If you're thinking about investing anywhere in real estate, I would really want to know, what do I really hope to get out of it? And I say that because people come to me all the time and say, hey, I want to be an investor and I'm going to do this. I'm going to buy this rental property because I've got my 150,000. Awesome. Why are you doing that? Because of all the cash flow I'm going to get. Well, let's look at it. And then they're like, well, I'm not really going to get it. If cash flow is your goal, then I would look more into notes. And that's on investing in general, right? If equity or you needed to leverage properties and you want to do some rental loans or you needed like lump sums of cash, might look at another route. But if you decided that's what you're looking for and we're going to buy notes, then the first thing I would do is you want to look at, well, who's created it? What is their reputation? And then you want to look at, it's not only the people who created the note, did they do everything right? And have they been around a long time? Do they have a lot of experience? And then how do they qualify their buyers? Because the last thing you want is to buy a headache. Nobody would want to do that.
No.
And so, like for us, we work very hard not to create any headaches. And then I would ask them, how would they stand behind their note? If there was a problem, what would be the remedies? How can they insure their investment?
And what do you mean exactly? How can you insure the investment?
So if people ask us that, it's not like we have one note. It's our first day. If Natalie says, hey, if this thing doesn't work, like 6 months in, they stop paying, I would say, hey, you call me, I'll give you another note and I will take that one back and I will take back the problem. We don't ever have to do it, but if it defaulted that fast, it was my fault. It was not your fault.
Right.
And as a business owner, you have to do the right thing, because if I don't, one, you would never buy another note from me. And two, you would tell everybody I wasn't a good guy. So we'll stand behind them on that. A few years in, we've always helped people when they have problems, issues. Well, what if we need to contact them? I don't feel comfortable. We will contact them on your behalf. You have to give us permission to call them, but we'll call them on your behalf. We'll swing by, we'll knock on the door. We'll say, hey, what's going on? How are they going to help you throughout the process if there's an issue? Ideally, there's no issues.
Right.
But if there is, what's going to happen? How am I protected? Who would I want to know? And what steps would I take? If they can't walk you through those, then I would think twice about it,
Yeah. Got it. Interesting. Well, thank you so much for enlightening us today. This was so fantastic. What are the best ways to connect with you for advice and resources? And if we want to take the investment opportunity with you.
Absolutely. So I always welcome people. They can call me or text me. My phone number, I put it out there, is 281-615-7007. That's my personal cell phone. But always you can shoot me an email. It's Nick, N-I-C-K, and the website, it's all spelled out. It's sellmysanantoniohouse.com. I'm sure you can put it in the show notes. But send me an email. I love to talk to people. I love to figure out how we can work together. If you're interested in lending, if it's short-term, long-term, owning notes, I'm super passionate about it. I love to talk about it. I don't think it's right for everybody, but I think it's right for a lot of people. And so I'm more than happy to connect with folks and see how we can work together to make us both more successful.
I am legitimately interested. Actually, I have rentals and they are much more of a headache and they are not passive. A lot of people say passive income.
That passive income is not passive.
It's not much passive about that. Not much passive about a 2:00 in the morning phone call,
Nothing.
Even though in LA, I always say, if you are purchasing investment property out here, it's really because you're purchasing it as the asset. It's not for the monthly income because you're probably just breaking even if you're lucky. It's much more about the building of equity that you can and have the opportunity to do in Los Angeles because the housing is short and people need to, be in rentals and equity grows here. Why?
Which is great. And so in that conversation with you or anybody, we'd look at that versus how does the cash flow help you? Because the equity is great, but you can't take the equity to the grocery store and buy, milk and eggs. But cash flow, you can. It comes in your account every month and you can spend it. So there's both sides.
Totally.
And sometimes a balance it works out really well for people.
Yeah.
And it's good to just discuss it and see what the options are.
Yeah, totally. All right, well, thank you. This was
my
awesome.
pleasure. Thank you for having me.
I appreciate you joining us today. And I think I'm going to be reaching out to you.
Thanks for listening to Mortgage on My Mind. If you're ready to start your mortgage journey or have any questions, I'd love to help. With 20 years of experience, I make the process as simple and stress-free as possible. Check the show notes for my contact info and don't forget to subscribe, leave a review, and share this podcast. Until next time, I'm Natalie Salins, here to help make your real estate dreams a reality.